Welcome back to Investing Talk podcast. Today, we're taking a close look at Regencell Bioscience Holdings. You've shared some really interesting info on this biopharmaceutical company. They're focused on traditional Chinese medicine, TCM for things like ADHD and autism spectrum disorder. So our goal here is to unpack all these sources you send over and really get a clear picture of what's happening. We've got quite a bit to cover. The company basics, recent performance, their financials, or lack thereof, maybe strengths, weaknesses, market buzz, competition, outlook, and even a pretty detailed due diligence report from just this month, May 2025, plus some very fresh updates on clinical trials and the stock. Things seem to be moving, well, very quickly.
They certainly are. It's a fascinating space, isn't it? Trying to apply, scientific methods to traditional practices for these really complex neurocognitive conditions. It's quite a unique angle in the pharma world, especially given how tough it is to find effective treatments for ADHD and ASD.
Okay, so let's start right there with the basics. What exactly is Regencell trying to do? It sounds like they want to connect these, well, ancient practices with modern science. Personalized TCM for ADHD, ASD, founded 2014, Hong Kong-based, using natural herbs. What jumps out at you about that whole approach?
Well, a key thing is that personalization within TCM. It's not just here's an herb for ADHD. They seem to be aiming to tailor these herbal formulas based on, the individual patient's specific profile, their constitution, imbalances.
Yeah.
That's pretty central to how TCM works.
Right, tailoring it. Okay, now let's shift to performance. Something that really stood out in the materials was this high short squeeze score 88. That points to a strong chance of a short covering rally. What does that signal about how the market sees the company right now? And we're also seeing huge volatility in the stock tied to those positive clinical trial results you mentioned. Is a potential short squeeze, is that a good reason to invest?
It's complicated. That high short interest, it shows a lot of people are betting against the company, right? There's significant skepticism out there. So when good news hits, like promising trial results, the short sellers might scramble to buy back shares to limit their losses. That can push the price up fast to squeeze. But banking on a short squeeze alone, that's usually not a solid long-term strategy. It's more about market mechanics than the company's fundamental health. The volatility we're seeing really highlights how speculative this stock is at the moment.
Got it, speculative. And looking at the financials, well, it paints a certain picture. No reported revenue, a net loss of 4.3 million US dollars. Now, you see this often with biotech still in development stages, but what are the real implications? The risks for someone thinking about investing, like you? How does having zero revenue make them even more reliant on, say, getting good news from those trials?
Well, it means everything hinges on outside funding, basically. They need cash to keep the lights on, to keep the research going. That's a huge financial risk. If funding dries up or if the trials don't pan out, well, the company's future is very uncertain. So for investors, yeah, your money is tied directly to them succeeding in the lab and eventually getting treatments approved and sold. Without any money coming in from sales, positive trial data becomes absolutely critical. It's what builds confidence, attracts more investment.
Okay, so the sources definitely point out those red flags, no revenue, losing money. But they also mention strength, like the innovative TCM approach and, again, that short squeeze potential. How do you even begin to weigh those conflicting signals?
That's really the core challenge here, isn't it? Balancing risk and potential reward. The novel approach, blending TCM and science, it's definitely unique. It could be a big deal if it works. And the squeeze potential offers a chance for quick profits, maybe. But, and it's a big but, the lack of revenue, the losses, those are serious risks. So anyone looking at this needs to be very honest about their own risk tolerance. This is, without a doubt, a highly speculative play right now.
Right. Speculative. And the market sentiment seems quite positive lately, mostly because of that squeeze talk and the trial results. But we don't see much in the way of detailed analyst ratings. What does that gap tell you about maybe the information available or how institutions view RGC?
That's a good observation. You've got this positive buzz, probably from individual investors, maybe day traders, reacting quickly to the news and the squeeze idea. But the lack of formal analyst coverage, it might suggest the bigger institutional players, the traditional analysts, are being more cautious. They likely want to see more solid data, more progress towards actually getting these treatments approved and to market before they weigh in officially.
Okay, that makes sense. What about competition? The report names big players like Jazz Pharmaceuticals, Share, now part of Takeda in the ADHD and ASD space. How does Regencell's unique TCM focus potentially give them an edge? Or is it more of a challenge against these established giants? And, are there unique regulatory hurdles for TCM treatments internationally?
It's definitely a double-edged sword. The TCM focus makes them different, which could appeal to patients looking for alternatives. That's the edge. But the challenge, they don't have the massive sales forces, the marketing budgets, the deep pockets of a Takeda or a Jazz. And yes, the regulatory path for TCM could be tricky. Different countries have very different rules and standards for herbal medicines compared to standard pharmaceuticals. It adds another layer of complexity.
So looking forward, the sources keep highlighting upcoming clinical trial results as being absolutely crucial. What are the biggest risks and, I guess, opportunities for Regencell in the near term, especially around getting approvals and keeping the funding coming?
You nailed it. The trials are everything in the short term. Positive results are essential. They need that data for regulators, for investors, just to keep going. Setbacks or failures in those trials, that would be incredibly damaging. The opportunity is huge. They can prove their TCM treatments are safe and effective. They could create a whole new market segment. But the risks, failing trials, not getting regulatory green lights, running out of money, those are very real and significant.
The due diligence report you share had some interesting numbers, like the negative EPS, earnings per share, recently, and the fact you can't even calculate a PE ratio because earnings are negative. What does that just reinforce about where the company is right now?
It just hammers home that this is a development stage company. Its value or perceived value is all based on future potential, not current profits. Negative EPS is standard when you're pouring money into R&D before you have anything to sell. And no PE ratio, it just confirms there are no earnings yet to put in the equation. It's all about the future hope.
The report also mentioned a negative beta of negative 1.97. That seems pretty unusual. What could possibly explain that? And what does it suggest about the stock's volatility and risk? Like practically, what does a negative correlation to the market mean if you hold this stock?
Yeah, a negative beta is definitely not something you see every day. It means the stock tends to move opposite to the overall market. Why? Well, it could be partly due to the extreme price swings lately. Statistical measures can get a bit wonky in the short term with that kind of movement. Or it might genuinely mean the things driving Regencell's price, like that specific trial news, are just totally separate from what's moving the S&P 500, for example. Either way, a beta that far from zero, negative or positive, signals high volatility, high risk. For an investor, theoretically, a negative beta could offer some diversification if the market tanks. But relying on that with such a volatile stock, that's tricky.
Yeah. And one of the biggest recent developments, it seems, was the positive news from trials in Malaysia for ADHD and ASD, plus something called the Earth-B trial for COVID-19 treatment. How significant are those results? Why did they cause such a huge jump in confidence?
Those results are absolutely the main driver behind the recent excitement. It's the first real, tangible sign that their TCM approach might actually work for these conditions. Getting positive data, especially in tough areas like ADHD and ASD where new options are needed, can dramatically change how investors see a biotech's future. Suddenly, potential revenue seems more real. And having encouraging results for a COVID treatment, too, that just adds another potential product to their pipeline, broadening the possibilities.
And what about the management signals? The CEO, Yat Gayu, apparently upped his ownership significantly and is taking just $1 a year in salary until they hit a $1 billion market cap. How should we read those moves? Are there any potential downsides to that kind of setup?
Generally, seeing the CEO buy more stock and tie their pay to a big milestone, like a billion-dollar valuation, that's usually seen as a very positive sign. Shows strong belief, aligns their interests with shareholders, skin in the game, you know? It definitely motivates them to boost the company's value. A potential downside, maybe. A very slight risk that focusing so intensely on hitting that specific market cap number quickly could encourage short-term thinking over long-term sustainable strategy, but usually it's viewed favorably.
Okay. And the stock's performance itself, it's been incredible, up nearly 280% in the past week and over 880% in the last month. That sounds exciting, but what are the dangers baked into that kind of meteoric rise? Especially for a company that, again, isn't making any money yet.
Yeah, that kind of vertical price movement, particularly for a pre-revenue company, screams speculation. It often goes way beyond the underlying fundamentals. It means the price is likely very unstable. It could drop just as fast as it rose if sentiment changes or if expected good news doesn't materialize. Buying in after such a huge run-up carries enormous risk. You could be buying at the absolute peak.
And we're seeing more chatter about it online, right? On platforms like X, Reddit. The report mentions this increased activity reflects growing interest, but it also warns against relying only on unverified online buzz. Why is that such a critical warning here?
Absolutely critical. Social media can show you what people are talking about, what's getting attention. That's useful. But the information there, it's often unvetted, sometimes wrong, occasionally even deliberate hype or misinformation. Pump and dump schemes aren't unheard of. Making investment decisions based purely on Reddit threads or tweets without doing your own solid research using reliable sources, that's just gambling, not investing. You have to separate the signal from the noise.
Okay. So let's try to pull this all together. Regencell. It's definitely a fascinating story. You've got this company mixing old traditions with modern science, getting some promising early results from trials, and generating a ton of market excitement, partly driven by that short squeeze possibility. But at the same time, it's very early days. No revenue, big losses, all the usual risks of biotech, plus the added uncertainty around TCM acceptance and regulation.
That's a good summary. And that massive recent stock surge really just highlights the highly speculative nature here. It's a classic high-risk, potentially high-reward situation. But the emphasis is definitely on high risk. Hopefully this discussion has helped you make sense of all the different pieces of information you gathered.
It definitely has. We hope this analysis was helpful for you listening as well. We encourage you to subscribe, like, and comment if you found this useful. What other questions does this raise for you about Regencell or maybe investing in the biotech sector more broadly?